This is Alan Bush with the Daily Financial Forecast for Thursday, May 18th. Stock index futures are trading mixed to a little bit higher due to better than expected corporate earnings reports and a more optimistic tone to the debt ceiling increase talks. We had jobless claims coming in at 242,000. That compares to the estimate of 255,000. Also, the May Philadelphia Fed Manufacturing Index a bit less negative at a negative 10.4 when negative 20 was predicted. Also, we had the April existing homes sales report and the leading indicators report, both coming in about as expected. So in spite of a variety of bearish news over the last several months, stock index futures have performed very well. Also, the debt ceiling situation may put a lid on futures, but once we get past that debt ceiling situation, I think there may be some follow-through gains in the indices. Moving over to the currencies, the dollar index gaining. Most of the strength appears to be linked to hawkish Fed commentary. In fact, even today we had a similar vein of comments from Fed officials talking about the possibility of raising rates later. Also, some talk of the Fed maybe not being able to pause rates. In fact, now the probability of the Fed keeping rates unchanged at the June 14th meeting at 61%, but there's a 39% probability now that the Fed could raise by another quarter. And this is the most hawkish we've seen as far as what financial futures are indicating as far as Fed policy going forward. So interest rate futures markets adversely affected by a more hawkish Fed and the increased probability, even though it's less than 50% of another 25 basis point rate hike. Longer term, though, the weakening global economy, I think, and the weakening U.S. economy will be a supportive factor for the interest rate futures markets. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.